And yes, we're live for now.
Awesome. Sorry. um, okay, welcome everyone to our Dream Talent Talk today. We have such an interesting topic that we're going to explore, the world of fintech. We're going to be diving into the world of fintech, maybe not too much of a deep dive because this is like big water, I would say, but we're going to have like a friendly introduction to this growing industry that is financial technology. We have a very special guest with us today that I will introduce a bit later. Um, so welcome everyone who's starting to pour in. We're maybe gonna wait for 3 to 5 minutes just to make sure everyone's ready to go. We're very excited to have everyone here. Thank you so much for sparing a bit of your time to learn with us. And it is such an interesting topic because, I mean, everyone is affected by this global pandemic, COVID-19. And one of the most devastating side effects, of course, aside from the human costs, is the hit it's taken to the economy. And that's what everyone is stressing about this global pandemic. People are losing jobs, companies are losing money, and the economy has seemed to just be at a standstill. So today we're going to be talking about fintech and the ways this industry could possibly help the country recover economically from the devastation of this pandemic. So we are so happy to have everyone here, whether you're a student, a C-level employee, researchers, academia, everyone's welcome. We would be so excited if people would like to have some questions that they want to ask or any kind of contribution to the discussion. This is just going to be quite a fun sharing session because I think fintech has become really popular the past few years, especially even for people who are in the younger generation. Like, it's such an up and coming industry, and it's so exciting to explore. I might start with a brief introduction. I should have started with introducing myself. I'm Yasmin. I'm representing Dream Action today. I'm so excited to be back to host another Dream Talent Talk. And of course, this is sponsored by Dream Action. And today we have our CEO and founder, Mr. Victor Osman, who's going to be talking through a bit about Dream Action. And our very special guest today is Mark Bruni from Koinworks. But before we start, that's Mark with the wave. Thanks, Mark. We might go through a little bit of a housekeeping situation. Right, so today we're talking about Fintech 101, Fintech and the Indonesian economic recovery post-COVID-19. Again, we have me as a host. We have Mr. Victor and also Mr. Mark as our source today. Bit of house rules. We would appreciate if everyone, apart from Mark, of course, and Mr. Victor as well, to have their microphones off, just so that we don't have any interruptions. And if your internet is stable and reliable, feel free to show your beautiful faces on the camera so it feels like we're meeting in person, because now we don't really meet a lot of people. We're stuck in our little tent. And if you have any questions later at the end of Mark's presentation, feel free to drop in the questions through the chat column, and we'll talk through them after Mark is finished with his sharing session. You can have questions throughout, of course, like you don't have to wait at the end to put in the questions, but we'll be addressing them at the end of the talk. And I might hand it over to Victor now to talk a little bit about Dream Talent and Dream Action. You have the floor.
Sure. Thank you so much, Yasmin. So for those of you, this is going to be very exciting. Thank you so much, Mark, for your time to share with all of us all about the finance things. So that's why we call it Finance 101. So in here, in Dream Action, one of our proud product, we call it Dream Talent. It's a predictive fit-based hiring. So it's an online psychometric testing platform for predictive recruitment and assessment. So The point is we would like to discover talents with the right job and culture fit from the psychometrics data. And we proudly say we are an Indonesian delegates for the one of the biggest tech show in the world in the South by Southwest in the Austin, Texas, USA. Without further ado, I'll share some of the videos that we will share to all of you about the how it works, how the Dreamtalent works, how can Dreamtalent help the companies, how Dreamtalent can help companies to find their culture, find their right people, and finally they can get the right team for them for sure. Okay, let's play it out. This is Dreamtalent Product Tour.
Welcome to Dreamtalent. Dreamtalent is a psychometric testing platform for predictive recruitment and assessment with focus on candidate job fit and culture fit. Let's take a quick tour. The ATS simplifies your recruitment process and candidate progress in each stage. See candidate resume, assessment results, and fit score, which is how well they'll fit this job. Set schedules for interviews and meetings with other members of your team. Chat with your hiring team before making decisions to advance or reject candidates. Create a job post and set the job description and basic requirements, such as education and experience. Set the psychometric requirements from pre-made templates or a dream profile of your top performers to find the right fit from your candidates. A dream profile is a collection of the attributes of the top performers in your company. Invite your top performers into the dream profile and have them complete the assessment. See the common attributes in your top performers: personality, intelligence, career values, and traits. Take the short quiz to discover your unique company culture. See your main culture characteristics and cultural elements such as leadership style and management style. Build your employer brand with an easy-to-make career page. Show your company's culture, values, vision, and mission to attract candidates. Verified companies will have the green verified badge on their page. Share your career page with a QR code or link and increase your reach to more potential candidates. Start your free trial with Dreamtalent today.
Okay, so that's it. And I'd like to say from Dream Action, thank you so much for Mark Bruni to spend some of your time to share to all of us. We got 100 more applicants, registers. There's also in YouTube, also in the Zoom. Thank you so much for your time, and really are looking forward to learn from you directly. Thanks again, and get back to Yasmin. Thank you, Yasmin.
Right. Thank you so much, Mr. Victor. And now, without further ado, I'm gonna introduce our superstar of the day, Mr. Mark Bruni, who is the CFO of Koinworks, but also a board member of the CFA. So this is the big time now. Handing over the floor to you, Mark. Thank you so much.
Thanks, Yasmin, and thanks, Victor. I'll just quickly share my screen. And
yes,
there we are. So, thank you for the lovely introduction. It is it's a real pleasure to be here today, and to be sharing a bit about fintech and a little bit about what we're doing here in Indonesia and how fintech is really going to help Indonesia as we come through this. I think at the moment there's a little bit of, because we're going through a downturn, there might be a little bit of pessimism about Indonesia, but I hope today, by the end of the talk today, that whoever's on the line here and whoever's listening is much more positive about what's going to happen with Indonesia in the coming years, during COVID and post-COVID. So just a quick update about Koinworks. I'll go into what Koinworks is a little bit later, but Koinworks is one of Indonesia's largest fintech companies. We do productive loans to Indonesia's SMEs. We also have a retail customer base who can come and make very small investments into the loans that we originate off our platform. We've been very busy in the marketplace since COVID. We've been out, particularly overseas, raising a lot of money in debt and equity facilities. And we had some announcements recently. We've raised over 20 million in additional capital facilities since COVID started. So I think that's not only a real tick of approval for Koinworks itself, but because that money's come from overseas, I think it's a tick of approval for Indonesia and the way that foreign companies will see Indonesia growing into the future. So, okay, so Indonesia's GDP, we're going to talk a little bit about economics, and with GDP basically being, the measure, for those who aren't aware of economics, GDP is basically the measure of what the economy has produced in a given year. And we typically measure the growth in GDP from year to year because you want to produce more this year than you produced last year. Indonesia's been growing their GDP very healthily for a long, long time. We'll go into the reasons behind that in a few slides, but even before COVID, we could all feel that growth was not going to last forever, and there was some sort of negative economic event coming up. And so we were, before COVID, we were expecting the event to maybe happen 2021, if not 2022. We were thinking things were going to slow down, and they were already slowing down pre-COVID, but COVID's obviously come in and everything's fallen off a cliff, basically, from an economics point of view. So this is the annual GDP. Here we've got the quarterly GDP. This figure here, it's so we've come in December last year, we'd started slowing down, and then Q1. So if you think COVID hit Indonesia towards the end of Q1, hit other economies a few months earlier, but hit Indonesia towards the end of Q1, mid-March. And since then, this figure here was an estimate from the Ministry of Finance. It's actually declined by 5.3%. So it's come down, and it's come into the negative by 5% since Q2, and which makes sense really, because if you lock everybody in the economy up, things aren't going to grow; they're going to go backwards, and things have gone backwards. But it's not all doom and gloom. So I want to step back from the Indonesian economy a little bit and talk about a subject that I really like, and this is about demographics and how the demographic structure of a country can affect its growth and its interest rates within that economy. And so here I want to use the example of Japan, just because Japan itself is kind of the opposite of Indonesia in terms of the way its demographics are structured. So in Japan, there are, here the chart on the left it's basically the population broken down by the age bracket. So you have all the young people at the bottom, the middle-aged people in the middle, and then all the old people up the top. And why this is important is because in an economy, and if people think back to their own lives and they think back to how their lives were, basically before people are about 15, they're not really producing anything. Their economic impact within an economy basically comes from their parents who are buying things on their behalf, selling things on their behalf, trading and educating them and participating. And so once people get to around the 15, up until kind of their mid 40s, people then start becoming productive and they start consuming. And why that's important is because people who are consuming are driving economic activity. If you're buying something, you're buying it from a business, right? And if anyone thinks back to their own life, when people are younger, and I'm pretty sure this is probably a fairly young audience, so people can just think of their life at the moment. People go to restaurants, they go to cafes, they go to movies. Pre-COVID, they go on holidays, and they buy houses and cars and this sort of thing. And typically they don't have a lot of money because they're young, so they have to borrow money. And the money that they borrow creates a demand for loans, and that then further fuels consumption, because once the money comes into the system, they then buy things, and the businesses they bought off buy more things. So you have a country like Japan where that portion of the market is tiny and it's shrinking. But then on the other side, they've got all these older people. So it's not all bad news for Japan, because what happens is that once people start getting older, so kind of mid 40s, once they've already, the children start to grow up, they've already bought their first home, they've paid off their car, they start to accumulate money. They start to save for retirement, or they start to sock away money somewhere, and they start to become capital rich. And so, they start to have pretty large bank accounts right up until about the time they retire, and then they start drawing down on those bank accounts. But, for the rest of their lives, they're fairly capital rich.
Mhm.
And so we look at an economy like Japan, where it has no, the consumer market is much smaller compared to the capital intensive section of the market. Now, what that's meant is that its economic growth, we're looking back at the last 5 years, is tiny,
Mhm.
less than 1% for most years. 2017, we had some Abenomics, but less than 1%. It's not moving.
Mhm.
Japan is a beast that's sitting still and not moving. And we look at the official interest rates in Japan at the moment, and it's minus 0.1%.
Mhm.
So if you're a bank in Japan and you want to borrow money off the central bank, they will pay you to take it. They pay you to borrow money off them. It's a great deal. I wish I could get it, but that's Japan. Now let's have a look. Indonesia, on the other hand, just to remind those. So that's Japan, very, very top heavy.
Yeah.
And this is Indonesia. Indonesia is very bottom heavy.
Right.
And you have a look at Indonesia, and you've got this large portion of people here who are not only in the consumer age, but they're also in the working workforce age as well.
Yeah.
Indonesia's workforce, so its ability to produce things, is growing.
Mhm.
And so, year after year after year, we've got more and more people entering the workforce than those who are leaving it. And so these people, there's a challenge for the government to make jobs for everyone. But once they have a job, they're being productive and they're producing. Human beings have a great quality where they typically produce more than what they earn.
Mhm.
So you have this large growing working age population in Indonesia. You have a very large domestic consumer class here, a large domestic consumer market. You have all of the resources you need in the whole world here, pretty much here in Indonesia. If it's a major resource, you have it here. So you have the supply of the land, labor. One of the issues here in Indonesia is that there's not quite the capital, because we don't quite have that large portion of older people who have saved up, who have gone through and saved up yet. So we don't quite have the capital, but we can borrow that from overseas. But we do have the land and the labor, and we are developing the skill set here in order to do this. Indonesia is coming up what we call the industrial learning curve. So it's moving from a low sophistication manufacturing base, and it's coming up the curve. And so we can see here things like motor vehicles and this sort of stuff will start to become produced here. I remember anecdotally around 20 years ago when China started making, actually about 20 years ago when South Korea started making motor vehicles, and it was about 25 years. But and we used to laugh at the cars that came out of Korea, because we were saying, they look like Coca-Cola bottles, and they're just as easy to break, and they're just as cheap. And then you fast forward, and when I've been to Korea recently, the same make of car is actually, they make beautiful cars. They're modern, they're well put together, they're just as good as anything from Germany. And that's what we call industrial learning within an economy. Now, Indonesia is doing this. One example I like to use is that when Jokowi first became governor for Jakarta back in 2014, he implemented a program where he put in place footpaths.
Yeah.
And because there were no footpaths before, the first footpaths that were put in, it was great to have the footpaths, but they weren't of a very high quality.
Right.
They would fall apart. Yeah. They were bumpy, they would fall apart, you'd trip over, they had holes. It was, it was really nice to have footpaths, but they weren't very good.
They're not functional.
But then we fast forward, and we had the Asian Games in 2017, I think, 17, 18, around there. But in the space of that 3 years, all of a sudden, the footpaths that were going in for the Asian Games were world class, world standard footpaths. You walk up and down Sudirman now, or around that stadium complex, and the infrastructure and the way the streets look and feel and how everything works, especially with our very Japanese looking MRT, and it is world class. There's not a better sidewalk in the world in terms of the way it's put together and made. We need to learn how to maintain them a bit better, but it's just an example of that industrial learning where, as an economy, Indonesia's contractors now know how to put together a great footpath. And that's going to play out across many industries here, because we have this large consumer market here. We're now putting together all of our own infrastructure here. And what this large consumer market has meant is that Indonesia's GDP has been very, very strong, very, very strong. So I spoke before, so just to remind you, the Japanese GDP was tiny.
Yeah.
Because of COVID, we're also expecting, Japan is expecting their economy to shrink by 4.7% this year.
Yeah.
So it's going to go backwards by 5%.
Right.
For the over the entire year.
Yeah.
Their interest rates are less than a minus. Indonesia, the economy here is going to shrink, but very, very slightly. It's going to be tiny year in year, because there's going to be some suffering through COVID, but there was a bit of growth before. There's going to be some growth coming out of it, and that's going to bring us back to pretty much par. You look at the interest rates here. Our interest rates are 4%.
Yeah.
Now that's because we don't have the capital here. So the little bit of capital we have to attract in, and to attract capital in, we need to pay more money for it. So it's more expensive. And so that's, so that's why our interest rates are higher than Japanese interest rates, because they've got lots of capital. They need to put it somewhere. So they're willing to put it somewhere for less money, for less returns.
Yeah.
So this is where the story is for, Indonesia, as we come out of COVID and post-COVID, especially once the vaccine's discovered and then socialized through the populations of the world, and the world is restructured, because it will restructure now, it won't go back to pre-COVID.
Right.
Indonesia is going to become a very, very, very attractive place to come and to do business. So we compare it, Japan is probably one of the more obvious examples, but there are many, many countries that have this problem. For the Japanese companies to survive, they need to export into a consumer market.
Yeah.
Where are they going to export? They're going to export somewhere like Indonesia.
Right.
And so, and they're also going to look for all of that capital that they have, all that money that they have sitting up there in their system. They need to put it somewhere. So a lot of it's going to come down here. And so we're now seeing, this is now Indonesia's time to kind of shine in terms of international foreign direct investment.
Right.
And I think this story, and we see here the pleasing part is that the bulge is even larger in the bottom end of this. So we've got, this is going to flow through for the next 10 to 20 years at least.
Right.
This good news story. Of course, there's going to be fluctuations, but it's going to flow through, very nicely. It's going to be a very good time to be alive in Indonesia for the next 20 years, economically speaking.
Right.
If we can do something about the pollution, that would be great. But economically speaking,
Barring climate change and
yes,
cities.
and diseases and famine and this sort of thing. But economically, we're going to be we're going to be great.
Right.
So how does this foreign capital affect Indonesia, and how does it actually come in? So one of the ways I like to talk about, and this is one of the roles of fintech, and this is how I bring fintech back into it, is in economics, we have something called the money multiplier effect.
Mm-hmm.
And this is where when you have one new dollar come into an economy, so whether it comes in through foreign direct investment or even just a tourist who jumps off an airplane in Bali, a foreign tourist jumps off an airplane in Bali, changes their US dollars or Australian dollars into rupiah and goes out onto the street and starts spending.
Yeah.
Whatever that is, but that money will come through and that will multiply within the system. So the new one, so say if someone brings in $1, they'll pay a merchant that $1 for a good or service. And that merchant, they'll tend to save a portion of it and they'll spend the rest of it.
Yeah.
So say that merchant, out of that $1, they save 20 cents, they spend 80 cents.
Yeah.
They spend 80 cents at the next shop, they're then saying, oh, we're going to spend a portion of it, save a portion of it. So all of a sudden that $1's come in, but it's come through the system. And so it's multiplied. And it's called the money multiplier effect for new money.
Mm-hmm.
And so in Indonesia, Bank Indonesia studied this, and in Indonesia, it's around 5 times. So the value of $1 is 5 times within the economy. It will go through that. It will go through the economy 5 times.
Yeah.
And so that, so whenever we have foreign money coming in, which it will come in, but not just with Koinworks. So I have to do the company plug here on the left, where we're bringing in new capital from overseas. So that 20 million will turn into 100 million of transactions here in Indonesia. And so, and this is it's a good mechanism for money to come in and come through the system, is in terms of when we talk about, when we see big headlines sometimes, where we'll have the World Bank or the International Financial IFC will come through and they'll say, oh, we have this multi-trillion-dollar facility for Indonesia. But how does that actually work? How does the money come in? You know, the money just can't come in and sit in the government's bank account. The money actually has to go out to the people somehow. And that's what we call the transfer mechanism. And so for us, bringing in foreign capital, our transfer mechanism is to loan that money out to smaller micro businesses. Bank Indonesia has a transfer mechanism where they loan money to the banks. And that's where we get our official bank interest rate from. And so, you know, this is, you know, we see fintech as being, you know, because fintech's very hot, as Yasmin said, it's very fashionable. And fintech is a great way to bring foreign money into the system and really help the Indonesian economy grow its way out of this and grow its way through this. Support the Indonesian SMEs and small businesses through it, and then help grow out of it. And so, you know, we're very happy to be playing our part here. So that's a very macro view of Indonesia and why I'm actually very optimistic about the future of Indonesia. And you know, once COVID comes through and finishes and we get through it, those who are left behind here are going to do very, very well. But let's take a more micro view. We're looking at the overall economy. I want to dive down and look at businesses now. So in Indonesia, we have just under 60 million SME players in Indonesia. These figures are before COVID. So I'm sure now the figures are actually higher because many, many people have gone home from COVID and they've started online businesses. Out of that 60 million, you know, 3.8 million are digital SMEs. And so what that means is that they're an SME that they're either selling via Tokopedia, Shopee, Lazada, or they have an e-wallet. So they're, you know, selling food on GoFood or GrabFood, or, you know, they interact via a digital means. And out of all these businesses, we have 64%. So almost two out of three are underbanked or unbankable. And so underbanked means that they might have a bank account, but they can't borrow money. And unbankable means that they can't even open a bank account. And so if you're a business and you're trying to grow and you're trying to, you know, establish yourself in the world, these can become, you know, really big issues for a business. You know, if you can't bank, how do you give a customer an invoice to pay you if you don't have a bank account? You know, if you might see a really good business opportunity, but you don't have the capital to do it. And so, you know, the situation for a lot of businesses is that they, you know, it's getting a loan application is a long process. It's painful. There's a lot of documentation. And also there's a very high non-performing loan ratio for those businesses as well. So within those who are banked in the system already, there's a very high non-performing ratio. So the system's not quite working the way it should. So I just want to quickly just look through an example and just maybe really help contextualize it a bit. So here we have an example of Ningsi, a 35-year-old woman. She's been selling, you know, operating for 10 years, revenue 50 million per month, and has a few employees. Really good at making her handicrafts, but and selling them locally, but not utilizing technology, not maximizing online marketing, doesn't have a business license. So because they don't have a business license, they can't then get access to capital to grow their business. So, you know, they might get a big order, but they have to say no because they can't fulfill those orders. This is very, very typical for micro businesses and small businesses here in Indonesia. There's not that sophisticated financial system sitting behind them that can really bank them and really help them grow and succeed as a business. So why would her business need capital? And so, you know, one of the reasons is that why businesses need capital is that sometimes it's cash flow timing. She might have to pay salaries this month, but the customers she's produced the wares for, we're not going to pay her for another 3 months. So she needs cash flow. Sometimes, you know, you need to buy new capital equipment. So for this business, you know, if they're making pottery or this sort of thing, they might need a turntable, or, you know, they might want to expand. So they might need a kiln or something like that. So, you know, and that requires capital as well. Sometimes there's an emergency. And, and I think what COVID shows is that you can have a really good underlying business, but then you have an emergency like COVID, where everything overnight, for no fault of the business owners or the market, everything turns off.
Yeah.
It's an economic shock. We call it an exogenous shock type recession. And these businesses are still good underlying businesses. Once COVID finishes, they're going to be good businesses again if they survive. And so they need some money to survive in the meantime.
Yeah.
And so this is why, these reasons is why we really need, businesses need capital.
Yeah.
And I didn't even mention, businesses who want to expand. That they need capital to buy more stock, more goods, more equipment, maybe put on more employees. It's really having access to capital can really make a big difference for a business's growth journey. So this is a figure I like to throw out there. It's from detic.com last year, but less than 30% of our micro and small businesses have access to capital, outside of their own pocket. So I think it's, if you think about the Indonesian economy and how it's going to grow over the next, the next 20 years and how that's going to happen, I think, unlocking that growth, part of that is giving more than 30% of businesses access to capital, maybe flipping that number and making sure it's 70% of businesses have access to capital. And that you can really see how that would really drive and help the Indonesian economy come out of this, it, much more quickly anyway. So about Koinworks, just very briefly. So we're now a super financial app. So we don't just do loans and we don't just sell loans to people. We have over 400,000 individual users who come in, and our individual users also help support the Indonesia's small and medium-sized businesses because they're in there buying loans. We grow typically before COVID, we were growing about 3 times per year.
Wow.
Which is quite amazing because companies tend to grow 15%, 20% per year. We were growing 3 times per year, and we're expected to come out and do that again, especially with all the capital we have now.
Yeah.
Our NPL rate has been less than 2% since inception, and so that means even though we're expanding, we're growing very quickly. Our discipline in making the loans, so our loan underwriting system or how we assess the loans is being proven.
Mm-hmm.
And so there's a very small rate of loans that don't default, and we're much less than the system rate of default. And so we have over 500,000 app downloads. So, and the most pleasing thing for me is here in this bucket here, where of our borrowers, because we're only targeting productive loans. So if somebody sees something in a store and sees something shiny in a shop they want to buy, we call that point of sales financing. We don't do that type of thing. These are businesses who they want to grow their business, they want to support their business.
Yeah.
And so we have 50% sales growth for our borrowers typically, and 60% of our borrowers eventually become bankable. Right. So they move from being underbanked to being fully bankable businesses. Yeah. Which is then, it's a win for them. To win for us. So we're really, really happy to have them like that.
Yeah.
That's cool.
So this is, we see Fintech as not just helping small and medium businesses have access to capital, but we're also helping young, millennial, pre-millennial investors actually have access to the investment markets as well. And so what we see here is that millennials will come out, they'll finish university, they'll go into the workforce, and maybe their income is not very high.
Yeah.
They might want to invest for a bit of fun, but because they're only investing less than 1 million rupiah, a lot of the financial companies out there won't touch them. They say, I don't want to know you, you're too small. And so they have either access to either very, very bad investment choices or none at all. Until they grow their capital. So they just have to save their money earning nothing under their mattress until they get to a certain size, and then they can go into the banking system or into the security system. But what we do, so people can come in and for as little as 100,000 rupiah, they can start buying portions of loans. We now launched a gold investment product. So you can buy gold from as little as 1,000 rupiah. So you can start making investments, tiny investments. Yeah. And that's, so we not only help the businesses, but we also help those who don't traditionally have access. And so we see a social impact on both sides.
Yeah.
You know, the young Indonesians who might not be wealthy, but who are starting to save money, just starting their life's journey of saving money, they're actually helping Indonesia's SMEs grow and succeed. And so we're bridging the two together, and it's really helping to really help Indonesia grow. And so we see that as a very very positive story.
Yeah.
So how do we make our product accessible to the market? So we're app-based, obviously. We're a tech company, so we don't need a big branch network or anything like that. We like to connect with partners. So if something's already existing in the market, we'll go and connect with them. So we work with all of the big e-commerce players. We work with all the point of sales providers. We work with a number of different other providers. So we can just connect into their ecosystem. And so it's very low, it's low hassle for them to work with us because we already know them through all their other connections that they've already made. We only have to start with a small amount. So, we're talking, we don't need to have a big ticket to justify the cost of our branch network and the cost of our overheads and this sort of thing. And we like to create, we say diversified products. So we make different products to suit different niches, and we change our underwriting depending on the partner network, depending on the profile of the borrowers that we're having come in. So this sort of thing all helps us access the market and take underbanked and unbankable borrowers and take investors or small scale depositors who wouldn't have access to the system, and we can bridge them together and create a system for them.
Yeah.
So we often get asked the banking versus a P2P lending model. Everybody on this call probably has a bank account. You put your money into the bank, you generally get a fixed return. Term deposit rates are around 5%. What the bank does, and a lot of people don't realize this, what the bank does is they then take that money and they lend it on. So they take your money, they pool it all together, and they make loans with that. So they can do mortgages, KTAs, yeah. And even the money in your everyday savings account is loaned out. Yeah, they do that. Yeah, so if you take up everyone's savings account balance, nobody. Yeah, typically people will have a positive balance in the savings account, and the bank will then model how much that balance typically is, and they can loan that out short term. So they're taking your money and they're loaning it out. Typically, they're making a very high margin on it because you don't see it. It's just the bank come in. They have a it's been around for a few hundred years, but that's the banking model. That's
I just always assumed they kept it somewhere and never touched it. Yeah,
it's they're out there. They're giving it to people. So the bank's there to make money, and they do, and that's okay for them. But the fintech lending model, how it's different is that an investor or a depositor or a lender, they put their money onto our platform, and once the money's in our platform, they can then choose the loans that they purchase. So they look at the underlying loans themselves. And so they say, I want to, they can look at the loan, they can look at the different loan profiles and say, oh, this one's a handicraft seller on Tokopedia. Oh, I want to finance them. I want to finance this one. We encourage people to diversify, and they keep most of the money. So we loan the money out. The money comes back. We take a fee and some administrative charges, and then the rest of the money goes back to the investor. And so people on our platform typically earn around kind of 16 to 19% per annum. Oh, wow. So it's quite a difference from 6% per annum to kind of 16 to 19% per annum. It is a really big difference. And these are not only can you feel good because you're helping Indonesia's businesses, you can also you can make some money for yourself as well. So we think that's quite powerful. Quite a powerful sales tool. Make some money, help people.
Yeah, and you see where your money is going as opposed to when you're just at a bank, I guess. Right.
Yeah.
Right.
You can see exactly where it's going. So we really like the model. We're ever expanding. We also have a managed type product where people can come in and they can get up to that they can purchase into a portfolio which already has over 500 loans within it. And so if people don't want to choose the individual loans, they can then come in and have just automatically purchase 500 different loans straight away. So, so that's the kind of major difference between the two. One is just the line of sight, and the other one is the higher margins. How do we originate loans? And so as a fintech, we work fairly similar to a bank, but different. And so when I say it's different, is that I mentioned before that we tie in with all the other tech companies out there. If a business is selling via an online platform, or if a business is using a point of sale system, some sort of business management software, they're using an accounting software, if they're using an e-wallet for transferring things like a Dana, we can then tie in with those systems, and we have that data on that business. So we take that data and then we use a traditional scorecard modeling, and then we can have a data-driven credit decision. So a good example for us is someone who might be a merchant on Tokopedia, who's selling things on Tokopedia. We can see their revenue, we can see, sometimes we can see their cost of their sales, but we can also see the customer feedback. Is that merchant doing business fairly? Is that merchant, are they responding to customer complaints? Are they delivering their goods and services on time? Are their customers happy? If the customers are generally happy, if they're timely, if they're responsive, generally they're good borrowers. Lots of customer complaints, not serving the customers, typically not so good borrowers. They might not even be very good businesses themselves. So, we take that independent third-party data and we can use that to make decisions. And so when talking about that data, where that data has come from, this is just an example of our strategic partners and who we're collaborating with. And so here, I mentioned all of the big e-commerce platforms. We've got collaborations with we do education financing within the vocational schools. We do a lot of financing through the e-wallets, through the through various different things, through universities, through point of sale systems operators, through basically if there's an electronic footprint, we can then access that, and we can then use that data and help make that business's life a bit easier, which for us, what we think is a very good sales tool. So credit scoring, I mentioned before, I'll go through it just very briefly again, but so we take all the data, we go through the underwriting process with the data that we've received, and then we produce a fact sheet. So our retail lenders or the retail depositors, they can then look at that business and they can make an assessment. And they can see what they're selling online, who they are. We don't give away the name of the borrower because we want to be the platform, but we do provide some information and some background on them. So people, it's not just putting the money into a black hole. They actually have that line of sight through to that business. So I'll just quickly flip through this. So this is the borrower. The borrower registers. We make a loan for them. We then give the data to we put the data up on our platform. The retail lenders analyze that data. They purchase the loan. And once the loan's fully purchased, we then disperse that loan to the underlying borrower. Typically, when we put a loan on our platform, it's fully funded or fully purchased within about 3 to 4 days.
Okay.
So, which is, we can disperse a bit more quickly if need be, but we like to put them up there and give people time to buy.
Right.
Okay. So, I mentioned before the story of Ningsi. So, we have the handicraft seller. It's based off a real story. This is Ningsi. She used to work for Bank Indonesia, funnily enough. Was selling hijabs online out of her home. She was, basically she wanted to turn her living area into a small manufacturing facility. She couldn't have access, funny, because she's working for Bank Indonesia, but she didn't have access to the banking system for her business. So she was using her personal credit cards and this sort of thing to finance her business. Very high cost. Our cost of lending is typically less than credit cards and less than personal loans. So, so she couldn't expand her business just because she didn't have access to that financing. She took a loan off us. She made a small manufacturing facility. which then helped her grow. She then took another loan, which helped her grow even further. And so she's now actually distributing, headscarves all over Southeast Asia. And so this is 3 years on from taking her first loan with us. So she's really grown, and she's really successful. She no longer works for Bank Indonesia. Obviously, she's got her own business now. That's ready. So if you see button scarves, if you're in the market for headscarves, please go and visit her. And so we were talking about how fintech is going to affect a lot of things. I just want to talk about a few things briefly. This is a HR format. So the new normal that we're coming into. So, we had pre-COVID, which was the old world that we knew. We had the lockdown period, which Indonesia wasn't so harsh, but we had a lockdown anyway. And now we have the limbo period, which is the period of softness. And then we're going to have the new normal after that. What comes out of it post-vaccine. We had things like people working in offices, people working together, people having to travel from their homes every day into a central place of work. What that meant was that businesses needed to buy real estate. They needed to rent real estate within cities. People needed to buy cars. People, living closer to work was actually worth a premium because it would save you time every day.
Right.
When you're at your work, you would typically go to the food stalls near that work, so that would produce businesses around it. You needed to wear certain clothes to work in, so you had to put on a suit and tie or something like this to go to work in an office. Now we have the new normal, which is here on the right. Which I'm the father of two children, and this is very, very typical. It's not quite so bad, but
that's a new normal, Mark.
It's a new normal.
I love how everyone's like, being around family isn't so bad.
It's lovely, but it has its moments. So and I'm sure not every day is going to be like this, and things will settle down. But the old days of going into the office, Monday to Friday, I think those days are gone. I think manufacturing and this sort of thing, obviously, there's going to be a need to, but I think the world is changing, and so I think that's changing the way the way society itself is going to be structured.
Yes.
And so real estate within the city, within the center of the city, the economic centers won't be as valuable. You can afford to live further out of the city. You can live 3 hours out if you only have to go to the office once a week.
Right.
You can go get you can work in downtown Jakarta and have a nice house in Puncak somewhere, and you could be perfectly happy with that because you're not traveling too much.
Yes.
You're using internet, you're not meeting people face to face. And so, this is going to change a lot of things, change the need for public transport, the need for cars, a lot of these things will change going forward. And so we need to think about that, how tech, and for us with fintech, it's just part of this trend. It's going to be part of this wave that's going to come through. And this next slide makes me very happy as a fintech provider, because in the new normal, and I think everyone's waking up, and it's about experiences now in life.
Right.
And in the old normal, people would go and wait at a bank to line up and take cash, or go and do their transaction at a physical bank. Or they do any number of things, go to the doctor for a routine inspection, or these sorts of things, which are now all moving online. Everybody's been forced, better or worse, everyone's been forced to use technology because they had to. Everyone had to. People like, my mother in Australia who had never used internet banking before, she had to use it, and she likes it now. It's a big it's a big thing. She's like, oh wow, I don't have to go there. No, you don't. And this sort of thing is that there's that in the old world, there's negative experiences where you wouldn't call going to a bank torture or anything like that, but you'd say you're not lining up to do it. You're not overjoyed with the thought of going to a bank. And so what people are going to look for now is that they're going to look for positive experiences when they're having experiences. And so this year, I have a picture here of people dining out together. And so this is really going to change the way things are structured as well. Banks for the last 20 years have been moving away from branch networks. We can already see now there's a lot of cafes popping up within clothing stores. And a lot of the malls nowadays, we saw even pre-COVID, a lot of the malls, a lot of the retail stores within malls under the old business model were dying. You go any shopping mall pre-COVID and probably a third of the shops are closed or being converted into restaurants. And because it's all about the experience now. You don't go to a mall to shop now, you go there to maybe look at some products. If you see a product you like, you'll typically jump on your phone and buy it so you don't have to carry it home. And then you'll eat out and you'll socialize and you'll have that positive experience. And this is COVID's really sped up this process. It's now not going to happen over the next 10 years. It's now happened. And we'll be live as soon as we go back live. So this is my outlook for Indonesia. I talk about things like investment markets and this sort of thing. Our outlook here is like I mentioned, it's 2 phases, and we don't know when exactly the first phase ends. We know that there will one day be a vaccine. I think COVID is a type of flu. It's a flu strain. We've never had a cure for the flu, but we've always had vaccines. We've had vaccines for a very long time. So I think that's why everyone's saying, okay, logically, we're going to have a vaccine. Before that vaccine comes, we have all this uncertainty. We can see now in other parts of the world, there's some reclosures. I'm very highly doubtful it's going to happen in Indonesia on a city-wide scale, but we're going to see offices closing down. We've seen that already where people go back to the office a bit too quickly. They socialize just kind of like we tend to do here. And then all of a sudden, bang, you've got half an office who has COVID, which is a little bit, it's a little bit dangerous. So that office closes down, those people will go home, they quarantine. And so we're going to see that happening for the next few months until we get that vaccine. And once that vaccine hits, if you think about the way vaccines typically work, is that they'll get produced in somewhere, Europe, China, US, and they'll tend to take maybe 12 to 18 months to trickle down into Indonesia. And so we have to really expect that this interim time, this limbo time, for instance, it's going to go on, at least another year. This vaccine will be fast-tracked, and I'm sure they'll make the code for it or the formula for it open source so that it can be produced locally. We're lucky we have a pharmaceutical industry here that can produce very quickly. So, so let's say it's 12 months until that happens. That means that, this will be, we're in this limbo for another 12 months. So I think people who are making investment decisions, people who are making career decisions, people who make any sort of major decisions about their life, protect your downside first. So don't risk yourself. If you're in a safe job, don't quit to start your online cupcake business. To start the online business by all measures, but try and keep your income as well. You'd be lucky to have one at the moment. So I think, and the other thing is I kind of want to get across, and I'm about to finish up, and it's that people should take this time, and if people have downtime during COVID, and a lot of people would have downtime during COVID, is that people really should take the opportunity to really invest in themselves. And this is we've got candidates here as an audience, and we've got HR professionals and this sort of thing. And if people, you can't waste a crisis, we always say, and I always look at it from an investment point of view in terms of markets and this sort of thing, buying when assets are cheap. But it's also about people, investing in themselves when there's time to invest in themselves. When we go back to normal, everyone's going to go back to having a busy life. So, nobody's going to give you a prize for watching the most amount of Netflix or finishing the most levels of a computer game.
You wish though, right?
Yeah, you wish. Well, that would be lovely. But we're, but people will, if you improve your qualifications, people will pay you more. And that's a prize. Getting money in the bank is a prize. So, it's take this opportunity, don't waste this opportunity, and really take it to, there's the old saying, investments in yourself are typically the best investments. Especially if you're young. if you're mid-20s and you've still got another 40 years in the workforce, and that investment in yourself can really pay off over the next 40 years. That's a good investment. So yeah, so I just want to finish it up there. Thanks for taking the time to listen. One more small thing to add. Koinworks, we have a local support local initiative going on through our social media, and this is about helping Indonesian businesses and Indonesian consumers help each other. So you don't have to come in and invest via our platform or whatever, but come in and support your local businesses, support your local manufacturers, and let's help. We're all in this together. We're all a community. Let's help it together. So thank you, Yasmin.
Thank you so much, Mark.
Thanks, Mark.
So we do open the floor if anyone in the forum has questions for Mark. So if you just put it through the chat, we'll go through them. I have a few questions myself. I'm fairly new to this whole fintech idea. I think people talk about it a lot, and when they do, it always has this it sounds so intimidating, because I think the first word that comes to mind is it's this big risk kind of industry, right? So I guess I was wondering if you had any advice or any insight that you could share for people who are hesitant or intimidated to go into the world of fintech in terms of risk association as well.
Yeah, I think fintech is actually a very big umbrella term. Yeah. So it encompasses a lot of things. It encompasses bigger players like us, and OVO and Dana and the e-wallets. And then it also encompasses a lot of very small players who come in and might, what we say, misbehave.
Right.
And so, we've seen in fintech, not so much within the past 12 months, but a few years ago, there was this trend of businesses coming in from overseas, not operating within the local rules and regulations. Right. And they were distributing loans without actually underwriting the loan, so not putting any thought into it. Yeah. And people would take the money. And you have unsophisticated people who might not be financially savvy, and they're accepting the money that's got a very high interest rate, and 6 months later they can't pay.
Yeah.
And the businesses were doing very bad things to try and get the money back from them.
Yeah.
Those sorts of players, they hurt the overall industry.
Right.
And we, we work very hard to try and, to try and assist, to try and call it out where we see it. I know the regulator and the FinTech Association has spent a lot of time trying to drill that out and trying to really stop that. And so, for us, that's, once that's aside, if you pick the right players, pick people with a social conscience, pick a company where, and this is not just for fintech, this is for any company, any employer, any industry you want to get into. Try and work with people who have a good, who have a social conscience, who care about what they're doing, who care about the long-term effects of what they're doing. I think is much better than
Right. So I guess we do have a variety of people who are watching this, from, I guess, level people to students as well. And I'm wanting to speak more on for people who might not be that familiar in the fintech world. So can you just walk us through what fintech quickly, and what is it? What kind of products and services fall under this industry? Because you did mention that it's a very large umbrella.
Yeah, so fintech is, it's basically any sort of financial product that's sold using technology. Sure. And so what we mean by that is it's not, you're not having to do face-to-face to purchase or to sell or to use our products and services. Right. So what that means is that, that being said, any bank is now a fintech company as well, because everyone's got the BCA app or the Mandiri app or whatever bank it happens to be. There's an application for it. So banks have tech as well. Where fintech players like us are different, and like the OVOs and Danas, the payment wallets and stuff are different, is that they do things differently to the traditional system.
Yes.
So with the e-wallets, so GoPay, OVO, what they allow you to do is to interact online without needing a credit card.
Right.
Whereas before those e-wallets, you needed a credit card, or you needed to, it was a bit of a pain. You'd have to then go jump into your application or go to the Alphamart or
Yeah.
the ATM and do the actual transfer.
Yeah.
What those guys have allowed is that they've allowed, okay, you can interact through our application, just put your money in, you can spend it, and it's made something. It's taken an issue from the past and it's solved a problem. Players like us, I spoke about how we took underbanked and unbankable businesses and we made them bankable by using data to give them loans.
Yes.
That solved a problem within the system.
Right.
And so what fintech tends to do is it tends to come in and solve problems within the overall financial system.
Right.
So things from payments, loans, investments, where we're seeing it now with accounting systems and management.
Yeah.
We'll eventually see it with things like incorporation and those sorts of things. So
Right.
we're seeing it across the whole system.
Right. We did earlier talk about how obviously COVID's been really bad for business across a lot of sectors, but it kind of sounds like fintech industries are almost thriving just because there's things to capitalize on in the crisis.
Yeah, I wouldn't say we're thriving, but
Right.
what I'd say is that, and one of the things that's been good about COVID for the better players in the market is that before COVID, we had some people in the marketplace who were not doing the right thing. Like I said, people would come in and they give out loans without actually knowing what they're underwriting.
Right.
What COVID has done is that it's meant those guys have gone bust.
Right.
And so it's taken out a lot of bad players in the market. And what you're left with is a few really good, strong fundamental players here. The people who are regulated, who have submitted themselves, opened themselves up to the regulator to come in and look and regulate us, and that have very strong capital, so very strong balance sheet, a lot of money behind us. These types of players are now what's left behind.
Right.
And so we think it's a much better marketplace going forward. We're very optimistic about the market going forward. The economy is going -5%. So, not many people are doing well at the moment. We're kind of treading water. We're just waiting our time.
Yeah.
And then when things reopen, we're ready to go. So yeah.
You did mention that you're very optimistic about Indonesia's economic growth. But we also touched on how there isn't really going back to pre-COVID, how we are restructuring. So then would you say post-COVID, Indonesia's economy might be better off than it's been previously?
Yeah, definitely.
Right.
I think any sort of restructuring, if you've ever refurbished a home, to make the house more beautiful, generally you have to knock down a few walls and throw out a few materials and bring some new stuff in. And that's going to happen across the economy here, where certain old industries are not going to do so well. New industries will pop up and flourish with all the new behaviors that's going to come in, the new, the difference in the real estate, the working from home, all these sorts of things. It's really going to change the way things are done here. Once all that comes through, and that'll make things a bit bumpy. We'll still be better than most other places in the world, but it will be a bit bumpy.
Right.
Once that comes through, there's the trend of our demographics, which I went in with before, compared to the rest of the world.
Yeah.
There's also something here with geopolitics, which I haven't touched on, which is where things have gone from a global supply chain, where the motor vehicle being put together in Japan, being assembled in Japan, takes parts from Australia, from South America, from North America, from other parts of Asia, and puts it together. It just opportunistically finds the cheapest point in the world for all the different parts, and it just puts it all together because there's a big free global system. Post-COVID, we're going to move to a regional system.
Yeah.
So countries that are geographically close to each other will trade together.
Right.
And so we'll see, I think good news for me is there'll be a lot more between Australia and Indonesia. There'll be a lot more between Indonesia and some of the neighbors here with, especially with Singapore, obviously, but, the Philippines and Malaysia and these sorts of countries. And with that, what that means is that a lot of manufacturing, that things that being produced maybe in China or elsewhere will come on shore. A lot of clothing that might have come from Bangladesh or whatever will then come on shore as well. And that means those local jobs, the local skills, all those sorts of things. And I think Indonesians will wake up and realize that great things can be produced here, and it's just going to feed into itself into a growth cycle. So I'm really optimistic about that trend and what that means for us.
Yeah.
I think that's bad news for Japan or
But
bad news for Europe.
it's our time.
Yes,
They've been like leading
it's Indonesia's
Asia.
time.
It's our time.
Yeah,
But
it's not good news for everyone, but it's good news for
right.
here.
It's
So
fine.
yeah,
And I think that's kind of one of the most important takeaways of this talk, because I think people are feeling quite bleak and gloomy about the future, and everyone's screaming, we'll never financially recover from this. But it
yeah,
sounds like we will.
yeah. We're going to recover and then some. So
Right, right.
yeah,
Which is reassuring for, I guess, everyone to hear, because I think
yeah,
people, this whole indefinite nature of the situation, people are kind of like, oh, like there's nothing to
yeah.
do afterwards. But especially in the Indonesian market, it sounds like more money's going to be coming in as well.
Yeah, I think it's all, you know, there's some bad times to come in terms of the short term. We're not going to just bounce straight out of it. But the other thing is that Indonesia being such a young country, is that most Indonesians haven't experienced a financial crisis in their adult life.
Right.
And unless you're an adult during a crisis, and the crises that we had here in 07, 08 wasn't that bad. 97 is bad. But you know, most Indonesians wouldn't remember 1997 in terms of, you know, the demographics here. So, you know, if think about it, this is the first time a lot of people are going through it. Unfortunately, for someone who's a bit older like me, I've been through it time and time again, and it's going to happen.
Right. That's the pattern.
Yeah, it comes along every so often.
Economic crisis, right?
Yeah, but I think Indonesia will, you know, once it comes out the other side of COVID, it's going to have a very long streak of growth ahead of it. Yeah, because of those fundamentals that will come through. Yeah.
And is that because of the, I guess, the consumer base that you touched upon earlier as well?
Yep, because of the consumer base, because of the resources, because of all the infrastructure that's being built here, because of the localization of manufacturing, all of the capital that's going to come flooding in looking for investment returns. I think it's very, you know, unless it's completely mismanaged, which, you know, all indicators seem to think it's been fairly well managed. Yeah, I think it's going to be very good for, you know, we see this playing out for at least the next kind of 10 to 20 years, if you have a look at the demographic tables. So
So in terms of, I guess, the kind of financial bodies that we have, would you then say, like, you know, totally unbiased opinion, that it's actually better for the consumer to put their money in places like Koinworks versus a traditional bank?
Yeah, I think they're different. So, you know, everyone's going to need a bank account eventually. But also, you know, and I think, to take a step back, I think people should be setting aside, you know, 5 to 10% of their monthly income anyway for long-term savings.
Right.
Everyone needs at least kind of 3 months worth of income for a rainy day. And that's my advice I give to pretty much everyone. But you know, you should be putting some of your money in places like Koinworks. You know, not to be biased. I you know, if I had my sales hat on, I'd say everyone put all your money in here. But you know, put your money into a place like Koinworks. Put some excess money into a place like Koinworks. If you're starting out the investment in your investment journey, and if you don't have a lot, well, we have very small ticket sizes. So you can grow your money with us, and then once you hit a certain size, you can then start reducing your portion with us and start putting it into, you know, bank deposits or the stock market or whatever, you know, whatever else you feel might be good. But you know, I have money invested in Koinworks, so you know,
could you maybe walk us through
good.
that process as well? Like, how, you know, the step by step of, like, how would it look like if I were wanting to start my journey and building my future finances with something like Koinworks as well?
Yeah, so with Koinworks, it's fairly easy. You just jump on the App Store or the Google Play Store, and you download the application. You register. You send us a photo of your KTP, and then you'll receive like a number of bank accounts that will link directly with your profile for your account. You then deposit money into it. You know, just typically via internet banking or mobile banking, and then once the money is deposited. Typically, it happens within minutes. So you send the money within a minute or two, the money's showing up in your Koinworks account. You can then look across our screen, and you can then look at our underlying loans, And then from there, you can start to make loan purchase decisions.
Awesome.
And so we have a web-based version, and then we have a we have the mobile version. So you can purchase via either way.
And is
And you
there
can look,
a person to consult with in terms of like what kind of loans you want to buy? Like, is there something in the system to make to help people make that decision, I guess?
Yeah. So we actually we have a very good YouTube channel.
Right.
We have a lot of educational videos there.
Perfect.
So yeah, so Google YouTube for Koinworks.
Yeah.
We also on our website we have a lot of educational material there as well. So if you have a question there, you can just use the search function. It's all in Bahasa Indonesia.
Awesome.
So that's no problem there at all.
Yeah.
We know that a lot of our customers or our market are new to investment or new to borrowing. And so we're not actually out there taking customers off banks and this sort of thing. We're actually bringing people into the market.
Yes.
And doing that, we know that we need to educate them.
Yes.
We want people being comfortable where they put their money.
Yes.
And so we like to keep things as simple as possible. We like to give them as much education as we can. And so that's why we have all of that education material available. We also have Instagram. So pretty much any social media that's cool, we'll have it. So, and if we're not on a platform that's cool, then let me know, and I'll. Yeah.
We have a question here from Sugeng. So he's saying, could you share how Koinworks attract lenders and borrowers, and then especially during the early days of you guys' inception, I suppose?
Yeah, so in the very early days, nobody really knew of Koinworks. People would we'd call up people and say, hey, we're from Koinworks. You're a business. We've been referred to you. Would like to borrow some money, and people would basically hang up and say, never heard of you. It's like, we're trying to lend you money, but no, it's. Indonesia being Indonesia, we have networks of friends and families and this sort of thing that have businesses, and so through that we slowly started to build both on the investment side and the borrowing side. So and so gradually over time that's now started to snowball, and we're now the most recognized peer-to-peer player in Indonesia. So
wow.
Yeah.
And then we have a question from Chris as well. So let's say that I am so new to peer-to-peer lending. How do I identify a good fintech to invest my money? Since today we do have a lot of fintech platforms. Ooh, good question. Thank you, Chris.
I'd say so. One is make sure that they're OJK licensed. If they're not fully licensed by OJK, don't go near them, because they might be shut down tomorrow. OJK is very, very good at, they find a player that's not licensed and they close them down. And when they're closed down overnight, if you've purchased a loan off them and that fintech player code closes down, that borrower typically doesn't want to repay that loan. So make sure that they're fully licensed. Just like you would with a bank. You wouldn't open up a bank account with a bank that's not a proper bank. Make sure they're licensed. Try and look for one. Look at the website, or look at their website or the application, and look at their loan page. If you're looking to invest in loans, make sure they have a lot of loans on their system available for purchase.
Okay.
And what I mean, it's like if you wouldn't go to a supermarket that has no stock on its shelves.
Right.
And so that's why if you're going to go purchase off a peer-to-peer platform, you want to go to a peer-to-peer platform that has a number of different loans there available to purchase. So that'd be the two main things. You look at the historical performance of that business as well. Within our sector, there's only really 3 to 4 players. So I don't want to mention the other ones, but people would know who they are very quickly. So I think most of us are, we're fairly good. So, if you stick within that realm and you diversify your loans, don't put all of your money into one loan.
Right.
If you have $1 million rupiah and it's 100,000 per rupiah in each loan, buy 10 different loans.
Right.
If you have,
1 million. Right.
If you have 10 million rupiah, buy 100 different loans.
Right.
And what that means is that, we have a default rate of 2%, let's just say. So it means that, okay, out of, so in that example, 10 million rupiah, you've got 100 different loan positions. So you lose 200,000 rupiah, right? Because you lose 2%. So you've got 9.8 million. So, but you're earning, say, 20% per annum.
Yeah.
So you get 20% per annum minus 2% that you've lost. You're still making 18% per annum because you've diversified.
Right.
And that's the peer-to-peer business. So, yeah.
So don't put your eggs in one basket.
No.
The people.
Diversify. Yeah.
We have another question from Melissa. Question to Mark. In the case of delinquency, who will bear the credit loss? The fintech institution or the direct lenders?
Yeah, so typically in a peer-to-peer case, the direct lenders would bear the loss.
Right.
With Koinworks, we have our, so we have a system in place where we provide protection. We call it a provision fund, where we protect the loans that people buy. And it just depends on how we grade that loan. So if a loan is what we call a grade A loan, we protect 100% of the principal. If it's a grade E loan, then we don't protect any of it. And it's in between. So if it's a BCE, then we protect a certain portion of it, less than 100%. And so what that means is that, like I was talking about before, we encourage people to diversify into a lot of different loans. And so, you're making enough money on the loans that you've diversified into to cover a small credit loss. We also have the what we call a Coin Robo product, which is where our algorithm automatically purchases a portfolio of loans on behalf, and it purchases over 500 different loans. And so within that, if a few loans go bad within that, then the customer still isn't losing. They're still, they're getting their principal back. They're making a very good return. Yeah.
And then next question, do you think, can Indonesia leverage a bonus demography in its economy during this pandemic situation? Yeah, so I guess, would Indonesia be able to leverage a new demographic base and capitalize on this crisis?
Yeah, I think it already is, and it was before COVID, and right. I think it will continue to do so even more. Indonesia has the good fortune of having a very tech savvy millennial kind of base of consumer here. People, when we talk about people having to move to e-commerce and this sort of thing, it's typically the older people who had to move to it because the younger generation were already there. So I think Indonesia was already leveraging the demographic bonus, and I think it's helped keep it solid during COVID. And I think it's really going to help it grow out of COVID as well. So,
and then I guess I'm just kind of wondering, why do you think peer-to-peer lending platforms has been popular, and then particularly in this climate, I guess?
Well, I think people like new things, and I think we've also gone to a niche in the market. In that, an untapped kind of niche in the market where people want to participate in these. People typically, you can go to a stockbroker and you can buy individual portions of equity within companies, within big listed companies, and you can participate in, buying debt. You can buy Indonesian government debt, you buy the government bond program and this sort of thing, but there's not really much variety there.
Right.
What we're showing is that you can purchase something different with us, and you can see the individual businesses that you're purchasing. Everyone here is a member of a community. Everyone knows someone who's a small business owner. The small businesses in Indonesia drive over 90% of the economy here. So small businesses everywhere. I think it's over 95% to be more accurate. And so anecdotally, that means everyone knows a small business owner.
Right.
And so people are really excited to go and fund other small businesses and to go and participate in those small businesses as well.
Yeah.
And so I think people, when you lend money to a small business, you kind of feel part of that journey. You feel part of the success story. Their success is your success. So, and I think people really like that. Yeah.
Mark, talking about people, like, was there a significant increase in loans defaulting? What I'm talking is loans defaulting due to this COVID-19 related, especially for the unemployment. And actually, like, how can fintech help alleviate individuals affected at risk of defaulting? Maybe you can share about it if you talk about the people things.
Yeah, so we have our non-performing loans have increased, as have everyone's, but we've been very fortunate in that because we do digitally enabled businesses. So we only typically finance digital businesses, and so these are businesses that before COVID they were already selling online or via a digital channel, and so what that's meant is that when COVID's hit, they were more easily able to push more of their business onto online or even all of their business online. And so that's provided a natural buffer for us. So we've been very fortunate where our strategy wasn't designed to survive through a COVID. It was designed because we like digital businesses and we thought that's where they're going to go. But just lucky coincidence that this economic crisis forced everyone to be physically separated. And so it meant businesses that were digitally enabled were better equipped to survive the crisis. And that was our customer base, that was our borrowing base. And so, we've seen a minor uptick in our non-performing. We've done a lot of restructures as well. So, some delayed payments and this sort of thing within the book, but overall, the overall book's still performing very well. So, yeah.
How about like, fintech or Koinworks help businesses? If we talk about the people industry as well, because Dreamtalent and Jalan is in the human capital solution, help businesses afford recovering manpowers or like prevent laying off more people post COVID-19, or maybe it's some kind of like a special program for that.
We did announce, so we're working on a program with the Jakarta administrative government. So we're working here. I'm not sure how much of that project is public knowledge yet, but we are working on something there with micro and small businesses here within DKI Jakarta. But that being said as well, we're able to give those businesses access to funding, and so we're very particular about businesses that we fund to as well, because we need to protect our customers' money as well. But if we see the business as being a good business going forward, that will survive the limbo and come out the other end and thrive, then they're a business that we want to support through the downturn. Because what we find, and in my career in finance, is that when you support businesses through a crisis and those businesses come out the other end, those businesses tend to be more loyal to you going forward, because the business owners understand the importance of a good relationship. And that's, it's old school banking, kind of one-on-one. You help a business out, and that business comes back, and they might even refer other customers to you because you did a good service for them. And so I think, whilst we're very choosy about who we're helping through, those businesses that we see have a value proposition for their clients that will last through into the new normal. We're really sticking with them as much as we can. So
that's cool. Really looking forward for it, and maybe we can have like a further collaboration through it.
Yes.
Like wise men say, if you're not a part of my struggle, then you're not a part of. Just like you say, helping people and making money, right? That's a very good thing.
Exactly.
Right. And I guess that's where platforms, peer-to-peer lending platforms have the advantage, because I mean, you, as a consumer, you'd obviously have to get some sort of capital with money coming in, but you're also helping other people. Other people grow financially as well.
Yeah, and that's our large value proposition, is that, we're not just helping one side, we're actually helping both sides.
Right.
And a traditional bank does that to a certain extent, but they have high cost of higher cost of operations because they have all the physical locations and this sort of thing. And if you think about a bank, a bank will have branches, and not just the branches, they have lots of cash. Then cash, not everyone can move cash. It takes logistics companies, guys who are armed with armored trucks and this sort of thing. And, this all adds up. And so, you know, for us, we're just tech based. We don't deal in physical money. We just deal in electronic money. And you know, this is all of our thing here. Sorry, it's a phone. So that's yeah.
Awesome. Do you have anything to add, Mr. Victor?
No, all good. Thanks, Yasmin.
Awesome. And do you have any closing statements for us, maybe, Mark? Anything else that you want to share?
No, I just want to say, look, it's been really good to come in and chat with you guys today, Yasmin and Victor, and with your audience here. It's you know, I love sharing the story of Indonesia and how I see it going forward. And please spread the word about, you know, this is a great place, and it's the demographics and all that sort of thing. It's, you know, don't be pessimistic. Don't be overly optimistic until we come out of it. But when we do come out of it, things are going to be great. So be optimistic. You know, we're really looking forward to, you know, really this country being very, very successful going forward. You know, it's already physically beautiful. It's going to be economically successful as well. So I'm excited to be here and be part of the journey.
Thank you so much, Mark. And that is so reassuring. I think especially coming from someone of your expertise, and then coming from someone, say, who's so you're Australian, yes? And I think
originally, yeah.
I think a lot of people who grew up here are like, ugh, Indonesia is so whatever, and then they get kind of bogged down, like kind of seeing the global market, and they feel like it sometimes feel like we're not really going anywhere, like we're not, there's not much to offer. But I think people only think that way because we can't really have this like bird's eye point of view that you're sharing about right now. So it's so wonderful that, like, even for me to hear like, oh my God, he thinks we've got a future. The next 20 years is gonna be great. Like none of us has to, like, you know, hit the panic button and move elsewhere. Like this is like a good place to invest your future into financially.
Yeah, well, I'm investing my future here.
Right.
So
right. Again, barring like
it.
raising water levels, but that's going to be everyone's concern. It's not just us. Awesome. Well, thank you so much. We really appreciate you being here and sharing with us your expertise so passionately as well. I think for me personally, I've always been kind of like, oh, fintech, so scary. But like you've explained everything in a way that's so digestible. And I'm like, oh my God, I should probably know this stuff. I should probably know that banks are using my savings to finance other people.
You know now.
I know now. And I'm like, maybe I should buy that bag. I wasn't gonna. And now I have a really bad spending problem, but now you're telling me my spending problem is financing people in this time of crises. So, I mean, I'll invest in myself in terms of material goods.
You can start to invest in.
Yes, I'm helping.
Buy the Indonesian handbag, not the European one.
Support local, as Mark said. Local support local.
Yes.
Yes, important point as well. We got to help each other. It's a community. Indonesia is a good place to invest. Like you said, we've got the consumer base and we've got the manufacturing resources as well. So if there's no more questions from the audience and there's no more input from you, Mark, or Victor, I just want to say thank you so much, especially to you, Mark, again, for coming in today, for giving us our time, for sharing that knowledge, for giving hope where hope is needed. The future's not gloomy. We will recover and we'll be in better shape than we've ever been before.
Great.
Thank
you so much, Mark.
Well.
Thanks, everyone.
Thank you.
And I believe there are still so many questions, but time is limited. And hopefully next time we can invite Mark again to share with us, Yasmin.
Yes.
And get some more hope, some more inspiration, some more insights for sure regarding this financial tech, fintech, and etc.
And about my spending habit.
For everyone.
Probably put in a peer-to-peer lending. And yes, don't forget to fill in your feedback as well. That's on the screen now. Thank you so much, everyone, for being here today. Such an honor. So exciting to always be talking to everyone. Thank you again, Mark. And thank you, Victor. And thank you, Dreamtalent.
Thank you
so much.
Thanks. Okay.
Good weekend, everyone.
Bye, everyone. Thanks.
Bye.
Okay, bye.